Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's February the 5th, 2017. Now, we've talked internally amongst our investment professionals about updating our clients on some of our major holdings as they release their earnings. Most of our clients will be aware that companies release their earnings quarterly, and typically most companies follow on the calendar quarters. So end of March, end of June, end of September, and of course the end of the year. And then about 3-4 weeks after each calendar quarter, they give their investors an update on the progress of their business and summarize what's happened and also where the company is going. And so what we've decided to do is from time to time, and especially around the calendar quarters, to update you on our top holdings, the companies that really matter, the companies that are driving the performance within our investment portfolio. So that's what we're going to do. So I know some of you will find these very interesting and follow along. Others, if you're not as interested in what's happening quarter by quarter in terms of companies, then you don't have to pay attention to these updates. That's up to you. But hopefully this will provide you more information and keep you abreast of what's happening in the companies, and also excited about the progress of companies in the portfolio. You know, in our view, as we've talked about more recently, we could see all sorts of volatility on the stock market, and stock prices can go all over the place. But typically, businesses are much more stable than their stock prices, thankfully. And what really matters is understanding the companies. So we're going to cover 4 companies very quickly, 4 major businesses that are within our top 20 companies in terms of our list. Many of you will have these companies, especially the first 2 I'm going to talk about. But if you don't, these are companies that we have, and at the right prices, these are the kind of companies that would be added to your portfolio when appropriate. So the first company I want to highlight, and we're going to have slides for each of these companies, will be Brookfield Infrastructure Partners. Now, this is our largest holding across our clients, so it's a very significant holding, very important company. And so you'll see on the slide that is up on the screen there some of the highlights of the last quarter, and also for 2016, which we just give you a snapshot here. Now, this company is a very high quality real asset business, so it owns real things, real assets, we like to say: utilities, transportation, energy, telecommunication businesses, ports, airports, and all of these sorts of infrastructure assets. And you can see on the slide there that the revenue last year actually grew by 14%. Now, some of that was because of acquisitions. And so what we like to look at is what was the organic growth? What was the growth of the underlying assets that they brought into the business at the beginning of 2016, and how did they do? And we call that organic growth, and that was up over 8% during the year. The FFO, which is a cash flow analysis per unit, actually increased also by 14% to $2.72. And they just released another increase in their distribution, so that their dividend is going to go up by about 11%. And so the dividend on every share now is $1.74 US per year. And so that's also great news for our investors, because you can continue to get great dividends in terms of your investment portfolios. Last year, some of their biggest investments were in Brazil, natural gas pipeline; in Peru, another toll road; Australian ports; and they also invested in 40,000 wireless towers in India. And we point that out because what you're seeing here in this company is this is a global company. It's a company that operates on 5 continents, all the continents, and it has significant assets. And they try to look for the best value. And last year, if you were following what was going on in South America, especially in Brazil, also in India, that's where some of the best values are, and that's where they've been adding to their portfolio. So we're excited with their prospects, and they turned in a terrific 2016. The second company I'll just highlight is also part of the Brookfield family, and this would be our fourth fifth largest holding in our group, and this is Brookfield Renewable Partners. And so this is the infrastructure asset business that focuses on those assets that are largely renewable in terms of energy. So that would be hydroelectric, which is their biggest asset, so generating electricity from the movement of water and rivers and so on, and also with solar and some windmills. And on the screen in front of you can see that last year their revenue increased by about 51%. That includes continued expansion and growth. Their FFO, their cash flow, was under some pressure last year, simply because of the acquisitions and some of the costs associated with those acquisitions. And also, some of the water conditions were a little lower. And so a company like this does rely, if it's especially obviously in its hydroelectric business, on high water levels, and the water levels were a little bit lower, so that resulted in lower revenues in that area. But of course, we look at this business from the long-term averages, and so those are doing just fine. So they also have increased their distribution by about 5%, and it's running at about $187 per unit. So that's great. And they continue to invest in more and more projects. This upcoming year, they're looking at 3 new Brazilian hydroelectric facilities and then 4 new European wind farms. And you can see that on the slide there. This is a company that has over 25 billion in renewable power assets across 7 countries and 3 continents. And it would be the largest independently owned hydroelectric portfolio in the world. And so, again, a wonderful company to own in portfolios and continuing to do well. And with all of the, I don't have to tell you about all the countries that are talking about spending money in infrastructure, there's going to be really a lot of growth opportunities for companies with capital, companies that know how to run real assets in the infrastructure space. The third company that we own is, again, one of our top holdings. Now, this would be down near the bottom of our top holdings, so it would be around number 20 or so in terms of our list, and many of our clients own this company, and this is Xylem. And this is in the water infrastructure space. As we've talked to you before, we like the water business. And if you look at the slide that is, again, up on your screen, let me just say a couple of things about Xylem. It's a leading global water technology company. It is involved in everything from testing, treating, transportation of water. Primary markets include public utilities, residential, commercial building services, industrial, agriculture. So it's involved right across the board. And this is a company, again, that operates in over 150 countries. So it's a very strong global business. Last year, their revenue was up by about 3.2%. That might not sound like a lot, but again, when you're relying on public spending, every percent or two is important and tough to come by. And we would expect their revenue to be in the 3 to 5% growth over the next number of years. But you can see that their bottom line is growing much faster than their top line. Now, we've given you an adjusted number because they're making acquisitions, but their bottom line was up by about 9.7%, over $2 per share. And this has given them the confidence also to raise their dividend. So we've seen a 10% increase in their dividend to 61 cents per share US dollars. They also, you'll see sort of new developments there. They acquired Sensus, which is a global leader in smart meters and network technologies for the water, gas, and electrical industries. And Sensus has more than 80 million metering devices installed across the globe. So again, we love the water business and trying to find great water infrastructure assets in this space. The last company that I'm just going to mention in terms of that had earnings released last week is in the healthcare space, and it's one of our significant healthcare businesses, and it's Becton Dickinson. And we've owned this for a number of years across quite a few of our clients' portfolios. And again, the whole healthcare space is intriguing. We've got a growing population, an aging population. There's some ups and downs in terms of funding, who's going to fund what. As we know in the United States, some changes that are going to be taking place to the Affordable Care Act, otherwise known as Obamacare. and we'll see how that all falls out. But we like Becton Dixon. This is really an amazing company. You can see in the slide there. Let me just say a couple of things quickly about them. They are a global medical technology company. They operate across 50 countries that provide everything from diabetes care to medication management solution, infection prevention, surgical and intervention equipment. And they are just a major player in the healthcare space. And we like what they're doing. They continue to invest in some really neat technologies, but they're not in the pharmaceutical area. They're not in some of the areas that capture a lot of the political pressures, and they're in more the bricks and mortars, picks and shovels kind of businesses, but very necessary businesses with tremendous franchises. And you can see last year their revenue increased by 21.4%. Their earnings were up by 34%. And they also increased dividend 10%, up to $2.64 per share. So these are 4 companies that are significant in our portfolios. At the end of next week, we'll be highlighting some more companies that release earnings. But we want to give our investors a flavor of the kind of companies that populate your portfolios. And these are great companies. And regardless of, we know some of the challenges that'll be coming down the pipe in terms of the global economy and some of the political issues and different fights that are going on, trading issues that might arise, or currency devaluations, and all of the different things that we would expect are going to happen in the upcoming year. We own great companies that produce wonderful products or own tremendous fixed assets that are necessary. They have scarcity. They have long-term pricing power, and we believe will continue to deliver very strong results. So here's 4 companies: Brookfield Infrastructure, Brookfield Renewable, Xylem, along with Becton Dixon. And we'll continue to update you on other companies as they release their earnings. And we trust this will be helpful and informative for you. Thank you very much. If you have any questions, don't hesitate to contact us. Bye now.